Looking to take your financial knowledge to the next level? You're in the right place. Welcome to Ask Ralph, offering accounting, technical, and financial advice. Whether you're looking to save taxes or improve your business, he's got you covered. Here's your host of Ask Ralph, Ralph Eastup Jr.
Hello and welcome back to the Ask Ralph Show. I'm glad you decided to join us. You know, one of the things that a lot of people ask me about in my practice is, do I even need to file a tax return? Well, right now we're in the tax season, and the IRS is expecting to process more than 150 million individual tax returns for the 2018 year. Now, in case you don't remember, for the 2019 tax filing season, you're actually reporting your income and deductions for 2018. People always say to me, like, you're living a year behind. Well, that's true. In my particular practice, we're basically doing things from a year behind. So that includes any compensation or income that you received in 2018, not necessarily what you were paid in 2018. Just because you received income in 2018, however, doesn't mean you need to file a tax return. So in some cases, you may not need to file at all. So let's talk about some of those situations. And there's some sort of hard and fast rules, if you will. The threshold for, and this is where it gets really complicated. So throw this one out there as an example. The threshold for married filing separately is $5. So you might say, well, how does that make any sense? And if you file as married filing jointly, but you didn't live with your spouse at the end of 2018, or on the date your spouse died and your gross income was at least $5, you must file a tax return. Doesn't matter how old you are. So that's one of the peculiar things about this. So the way that you can really look at this right now, though, is the result of all of the tax changes, that whatever the standard deduction is, that basically becomes the filing threshold for most taxpayers. Just remember, your standard deduction also gets larger for those of us, not me personally, but those of you who are 65 and older or blind. So you might be $24,000 for married filing joint, but $26,600 for married filing joint if you're both over 65. So how do you figure out what your gross income is? Well, you consider all your income you receive that isn't exempt from tax. So that would be, W-2 earnings, any income from sources outside the United States, income from the sale of your main home, even if you're able to exclude it. And that's something a lot of people don't understand, is that you do have that $500,000 exclusion for married filing joint if you sell your primary residence. But that doesn't mean that you may not have to file. I always tell people it's a good thing to file. If you've had any gains reported on Form 8949 or the Schedule D, that would be found on the 1099-B that you got from the investment house. Or if you had any business income reported on the Schedule C, which is like a small business, or a Schedule F, which is a farm. Now, when you're figuring this out, though, one of the things that gets a little complicated is you don't include any Social Security benefits unless you're married filing a separate return and you live with your spouse at any time in 2018, or, and this is where it gets complicated, if one half of your Social Security benefits plus your other gross income and any tax-exempt interest is more than $25,000 or $32,000 married filing jointly. So that's that whole thing we talk about when you have income from Social Security and ends up some of it being taxed. So that's one of the things that gets complicated, and that's why you might want to talk to somebody like myself. But so what are some other ideas? So for single dependents who are under the age of 65 and not blind, you generally must file a federal income tax return if you're under an income such as ordinary dividends, interest is more than $1,050, or if your earned income, W-2s, things like that, was more than $12,000. So that's for single dependents who are under the age of 65. Now, for single dependents who are over the age of 65 or blind, you generally must file a federal income tax return if your under an income was more than $2,650, or if your earned income was over $13,600. Now, for single dependents who are over 65 and blind, you must generally file a federal income tax return if your under an income was more than $4,250, or if your earned income was over $15,200. So how many people have I lost already? You can see that it's complicated. Now, let's add a couple more to this. For married dependents, when either of you are under the age of 65 and not blind, you generally must file a federal income tax return if your unearned income was more than $1,050, or if your earned income was over $12,000, or if your gross income was at least $5 and your spouse files a separate return and itemized deduction. See, that's the thing with this. And that's why they bring that out, is that married filing separate basically triggers a situation where the other spouse has to mirror what you're doing. So in other words, if your spouse that you're separated from is doing married filing separate and they itemize deductions, well, you're going to need to do the same thing. And if your spouse is taking the standard deduction, you're going to have to do the same thing. Let's continue on. So for married dependents, when either of you is over 65 or blind, you generally must file a federal income tax return if your unearned income was more than $2,350 and your earned income was more than $13,300. And again, we talk about that $5 deal with married filing separate. One last thing. For married dependents, when either of you is over 65 and blind, you generally must file a federal income tax return if your unearned income was more than $3,650, your earned income was more than $14,600, and your gross income was at least $5 and your spouse files a separate return and itemized deductions. So we got through all that. So over and above those decision points about income, which and they really are based on income, there's a couple of other reasons that you may have to file. One of which is if you're self-employed. If you're self-employed, you must file a federal income tax return if your net earnings are at least $400. So that would be anything that you received on a 1099 form. And remember, they're saying your net earnings, $400. So once you subtract your expenses from it, technically, let's say you got a 1099 for, $2,000, but your expenses were $1,800, then your net is $200. You don't technically have to file, but I will tell you, probably makes sense to file. There's also taxpayers who owe special taxes like the recapture tax, such as the home buyer's credit that was offered a few years ago. Maybe you have alternative minimum tax, write-off or write-in taxes, such as uncollected Social Security, Medicare, railway retirement on income that's reported from your employer. So let's say that you retired and your employer is still covering some of your group life. You have to pay tax on those things. And this is a bizarre one. I wasn't even aware of this one. This is a fascinating thing. So any taxpayer who received wages of $108.28 or more from a church or qualified church control organization that's exempt from payroll taxes. I thought that was funny. $108.28. Not sure where they got that one from. Any taxpayer who took HSA, Archer MSA, or Medicare Advantage MSA distributions. Any taxpayer who took an early distribution from a qualified plan like an IRA or a 401k. Any taxpayers who made excess contributions to an IRA, and any taxpayer who was supposed to have taken required minimum distribution and didn't. Now, one final thing before we move on to the next thing in our show. The healthcare law is still applicable for 2018. The new tax law where they talk about the mandate doesn't start till 2019. A lot of people are confused by that. So when you're filing your 2018 tax return, you must attest to whether you had health insurance or not. If you didn't have health insurance, you're going to pay a penalty. Now, that goes away in 2019. But if you still receive advanced payments for your premiums, you may still need to file in 2019. So I hope this was helpful. I know that it got a little lost in the details, but this way you'll know if you need to file or not.
You've been listening to Ask Ralph, brought to you by Saggio Accounting Plus. Please subscribe to and rate our podcast on Apple Podcasts or wherever you get your podcasts, and leave us a rating and review. Our podcast is produced by Carolyn Peters. Thank you for listening, and be sure to like us on Facebook and follow us on Twitter at Ask Ralph Media. You can also hear me each week on 1450 WILM and on 1410 WDOV in Delaware and on the iHeartRadio app. Submit your questions or ideas for future shows by sending an email to AskRalph@AskRalph.com.
The information contained in this episode of Ask Ralph is based on data available as of the date of its release. Saggio Accounting Plus and Ask Ralph Media Inc. is under no obligation to update this content if changes occur. Applying this information to your specific situation requires careful consideration of all facts and circumstances, and any information provided is not to be considered as financial, tax, or legal advice. Please consult your tax advisor or attorney before acting on any material covered.